Good afternoon, everybody, and welcome to the Q2 earnings call of Federal Bank. With me are Shyam Srinivasan, MD and CEO of Federal Bank, Ashutosh Khajuria, Executive Director, Ganesh Shankaran, Executive Director, and other executives. Over to you, Shyam.
Thanks, and good afternoon, everybody. Thanks for dialing into our Q2 call. Let me just go straight into the highlights of the quarter. I do hope you had a chance to see our investor deck. So I'm extracting the key takeaways from that. One, we believe we've had a strong operating momentum and strong operating quarter, reflected through growth, reflected through strong operating profit numbers, which have been at an all-time high of 698 crores. The quarter did see some, natural calamity in our crucial market of our home market. We believe we have dealt with it quite well, both in terms of the human and emotional aspect, as also the comeback by the bank. There have been implications for people in the state, but the bank has handled it quite well. So a strong operating momentum. Our focus on developing a granular liability franchise remains intact. Market share gain is quite pronounced, both in credit and in deposits. A few milestones along the way. We crossed 100,000 crores of business outside of our home market. We crossed 100,000 crores of credit outstandings this quarter, and taking our market share up to 1.12%. Organic credit growth has been good. We've been diversifying our portfolio across the different segments, be it corporate, retail, SME, agri, and we believe that the vertical architecture that we put in place is now beginning to reflect in performance, both in terms of credit growth, liability growth, as also fee income, and that's something that we will build strength into as we go into Q3 and beyond. We had recruited some senior people in specific areas, and that's beginning to show traction. So, in effect, operating performance strong. Credit quality, the provisions for credit were at 152 crores. The overall slippages for the quarter was at 477 crores, and it did have some impact of the Kerala floods, which we had guided for when we did an interim call at the middle of August, immediately after the floods. Otherwise, our commitments and our focus, which was at the beginning of the financial year, was that we would have overall slippages in the financial year. At that point in time, we had guided for about 1,300 crores. And then we said the Kerala impact could be about 150 crores. So we think the full year financial slippage number will be in the 1,450-1,500 crores, and credit costs will remain 65 to 70, which was the guidance given then and even now. So growth strong, credit performance quite along expected lines. Strengthening the balance sheet is a core thrust area. Getting our strategic partners in specific areas where we have commissioned activity is beginning to play out quite well. We got the regulatory approval for the True North investment this quarter. We formally completed our investment in Equirus as well, and they are now an associate of ours. So momentum, credit quality, architecture of the business are quite playing out to script. We believe that the momentum of the bank as we go into Q3, 4 should reflect this whole underlying strength that we have built, and we are turning out to be an attractive employer for people who want to make an impact, and we are encouraging good talent to come in and work for us. I would like to not dwell on the specifics. I'm sure there are going to be questions that are going to come in. We have the entire senior team with me. So let me just open it up for questions, and through that explain the quarter and importantly the period ahead. So operator, if you can turn it out for questions, please.
Sure, sir. Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prakhar Agarwal from Edelweiss Securities. Please go ahead.
Sir, Kunal over here from Edelweiss. So firstly, with respect to this entire impact of Kerala floods, so how much would that be in Q2, and how do we see it going forward in Q3? Is there anything which is left out to be recognized? And the related question is with respect to the when we look at it in terms of the guidance for the slippage which we had given last time. So in the first half itself, we are already through 950 odd crores. So how do we maybe reevaluate the guidance of the overall slippage as well as the credit cost?
Thanks. Kunal, at the beginning of this call, I said that we are holding on to our credit cost forecast of about 65 to 70 basis points. Q1 was 71, Q2 was 64. We believe 65 to 70 basis points is our target for FY19. We had also said at the beginning of the financial year that the overall slippages we expect is about 1,300 crores. And because of the Kerala floods, we said we would probably be about 50 crores extra per quarter. So that means about 150 crores. So 1,450 crores is the expected slippages for the financial year. We think that's very much in the pipeline for delivery. In specific to this quarter, the slippage was 477 crores, out of which the Kerala part was about 220 odd crores and corporate was about 120 crores. And we think in Q3 and Q4, the slippage in Kerala will be in that zone, plus minus. And the impact of the slippages has been addressed. We have also had the opportunity using the SLBC dispensation to restructure accounts that are in select PIN codes in select segments. So wherever the account is not in the select segment or PIN code and if they are stressed, we made it NPA. And wherever the dispensation is available, we have done. The restructured standard this quarter in Kerala is about 35 crores. And that number in Q3 can about be 70 odd crores because the expiry date of the dispensation is November 30th. So between Q2 and Q3, the standard restructured advances in Kerala will be roughly 100 crores.
Okay. So this quarter you highlighted the impact of Kerala out of 477 was?
Total Kerala was 220 crores.
Okay.
And the impact of the floods would have been about 40 to 50 crores, which was the number we had we thought will be.
Okay. Okay, yeah. Thanks a lot.
Thank you. The next question is from the line of Renish Bhuva from ICICI Securities. Please go ahead.
Yeah, hi, sir. Congratulations for good set of numbers.
Thank you.
Sir, my question is on the loan processing fee, which has witnessed a very pretty sharp jump on QQ basis at 52 crore versus, roughly 30-35 crore a quarter for last 3 to 4 quarters. So what explains this sharp jump in the loan processing fees, sir?
It's nothing unusual. I think it's to do with our penetration with more middle market and those kind of clients in the deeper geographies who are more amenable to fees. And there's probably a little more energy and focus on the system on fees. So I think that explains why the...
And renewal fees.
And renewal fees, So it's just that looking at different fee lines a little more closely, bringing more intensity, pursuing the right kind of clients who are amenable for fees, and the expansion of the wholesale bank book into deeper geographies.
Right. So, is it fair to assume this kind of a run rate in processing fee going forward? Of course, it will be in line with the overall disbursement, but is this...
assuming the clients are willing to pay, I think, and it remains a market practice, we should...
No, I think the short point here is, for long, we've been talking about our other income being extremely reliant on treasury-related income.
Right.
This was one where we saw all the aspects of it coming together, whether it's new processing fees for gold, for our renewals, for our corporate business book. And we've also seen good traction on FX. We've also seen good traction on retail income.
Okay. So broadly you're saying all these numbers are sustainable given current market scenario?
Yes, that's what we are working towards, and our guidance remains intact on that count.
Okay. And sir, secondly, on the other OPEX part, again, that number has been, grown by almost 12% on QOQ basis, despite we are not adding any branches or any, significant ATMs. So again, why the sharp jump on QOQ basis on the other OPEX part? So it is
this quarter saw some increase because of Kerala flood related
support.
We had to give support to the state. So the flood related undimensioned aspect beyond credit is a lack of, we waived off fee income of almost 10 crores. We spent almost 7 to 7.5 crores for various contributions, restoration of lives, helping employees who have had challenges. So combination of that is almost 18 crores of operating profit impact plus the credit-related impact.
Okay. So out of, can you please explain this number again? I mean, out of 18 crore, how much is the OPEX part and how much is
about 8 crores. About 8 crores.
8 crore is the OPEX part.
Yeah.
Okay, yeah. Thanks a lot, sir.
Thank you. The next question.
Sorry, I wanted to point out, which is not a fancy thing, but we did pay the penalty of 5 crores also.
Yeah.
Thank you. The next question is from the line of Nandakumar, individual investor. Please go ahead.
Respected MD and CEO Sri Shyam Srinivasan, kudos to you and your team for the good performance in Q2 FY19. I hope that this momentum will sustain in the quarters to come. I have two questions, sir. What is Federal Bank's total investment in financial services? FedFina, what is our total investment and what is the valuation by True North? And what is the price at which they will subscribe 26% stake? I understand there was a press note saying that they may at a later date increase their stake to 45%. At any agreement with them as to at what price they will increase the stake to 45%. Then I have one more question about Equirus. What was the valuation of Equirus and what percentage of stake did Federal Bank buy and at what price? What are the other future plans for enhancing our stake in Equirus? And in these two cases, both in the case of True North's investment in FedFina and our investment in Equirus, what is the benefit envisaged for Federal Bank from these two investments?
Thank you, sir. Firstly, on the FedFina investment, we have received the regulatory approval. The valuation, we are waiting for the last step in the process, which will be completed by November the 7th or 8th, at which time the True North money will come in, at which point we will be able to share the valuation. But we are happy that the valuation is at the top end of the market valuation, which was done thankfully well before the sort of meltdown in the NBFCs happened. The reason we've got a partner like True North is not for us to monetize the value. It is for getting strategic investment into the company, which is doing well. The book is about 1,500 crores and growing. We needed to infuse capital. We had the choice of infusing directly or getting a strategic partner. So we have brought in a strategic partner. We are not doing any sale of this. The ability for it to go to 45% is over time based on milestones. At this juncture, we are happy with 26, and we will see how the relationship matures. It could be years before we get into the 45%. So vis-a-vis True North, we will be able to share the moment the regulatory, all the steps are completed, which I think will be over by November 8th or 9th, at which point in time we will be, sort of a Diwali release, so to say. In specifically a question on Equirus, Equirus is a unlisted entity. This quarter we have had to make we made the investment, so we in fact provided for it because the regulatory requirements require us to make a provision of mark-to-market on an unlisted entity. So we have done that. The investment made is about 20 crores.
Okay. For what percentage of the stake in the company?
19.9 is what is allowed. And beyond that, we need regulatory approvals. When it happens, we will take it up to 26, and if things mature, even higher. But at this juncture, it's 19.9. We are not allowed to do more than that.
And, sir, what benefit do we envisage with the tie-up with Equirus?
So they are an investment banking boutique firm and a high net worth wealth management team, for both of which our RMs are working closely with them. We're able to get in fact, we've already got 3 mandates on IPOs. And the team is also working very closely with our clients on getting in. It's an area of business we don't have direct skills, so we're getting domain expertise.
Okay. Thank you, Shyam. Thank
you so much. Thank you.
Thank you. The next question is from the line of Sagar Shah from KSA Securities. Please go ahead.
Hello, sir. Good afternoon. First of all, congratulations on a good set of numbers.
Thank you.
Yeah, my first question, sir, is regarding something I wanted to know. As I see in your commercial and corporate portfolio, in the commercial portfolio, 12% of your lending is to real estate business actually, and 6% of your corporate is in again is in real estate business. So basically wanted to know why something like the percentage as compared to other industries is high, and do we exactly actually lend to the various projects or in urban areas?
Largely these are lease rental discounting, rent securitization, and these are done in specific geographies for about 7-year tenure, with the lessees being of high repute and sufficient caveats and covenants to make sure that the bank's interests are well protected.
So we are basically not lending to any other something like certain projects or project financing.
We don't do any of that.
Okay, you are more into lease rental discounting, you say?
Only into that.
Okay. And so my second question, sir, is regarding to what percentage of our total loan book has been linked to the new MCLR?
Well, it's about 80 to 83%.
83%? 83% of the loan book has been linked to the higher MCLR, you're saying?
Yes.
Not higher.
Higher, no, it is MCLR.
Migrated from base rate to MCLR.
It is at MCLR.
Okay. Because I think as I learned that your cost of deposits, I think would have gone up as like other banks actually. So are we able to pass on the extra cost to our customers, to our even previous customers?
No, at the time of renewal, we are able to. In certain instances, based on the agreement, we will.
MCLR is 50%.
My apologies. 1 second. Let me just clarify. Base rate book is 10%. Non-base rate book is 90%, out of which direct MCLR is 50%. The base rate is 10%, non-base rate is 90%, MCLR is 50%.
Okay, non-base rate is 90%.
Yes.
Okay. So how much is it floating and how much is it fixed, sir, of the total loan book?
Floating is a small component. Sorry, fixed is a small component.
Fixed is a small component.
Yes.
Okay. Thank you, sir. Thank you so much. All the best.
Thank you. The next question is from the line of Rakesh Kumar from Elara Capital. Please go ahead.
Hello.
Yeah, go ahead.
Yeah. So firstly, the capital consumption rate in this quarter appears to be quite high. So credit risk weight growth is pretty high. So can you elaborate on that issue?
Normally in a quarter it's about 35 basis points to 40 basis points. This quarter has seen a higher capital consumption. We have seen a significant pickup in assets, and the capital consumption on that has increased. We don't have any specific observation on that other than the fact that our trend line is about 35-40 basis points per quarter of capital consumption.
Half-yearly profit is not added, and this is also.
Yeah, that is another observation. Half-yearly profit number has not been added. So to that extent, when we add the half-yearly profit, the CRAR will go up.
No, just I am looking at, the gross advances growth and, your credit risk weight. I'm not looking at other total risk weight or maybe the tier 1 capital. I'm just looking at these two absolute numbers.
Yeah. So that's, like I said, there is no unique explanation other than the fact that a trend line will be about 35-40 basis points.
Okay, sir. Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Amit Rahane from Quantum Securities. Please go ahead.
Hello. Yeah. Thank you for the opportunity. Sir, I would like to know how much is our exposure to NBFC sector as a whole of the total 1 lakh crore of the loans that we have. How much we have lent to NBFCs?
Between 10 to 12% of our total assets is NBFCs. Largely in the top rated, all of them are in the top rated, with the top 4 names 3,000 crores.
Top 4 names 3,000 crore. Okay. And sir, what are the average yields on this?
Varies in line with market, but roughly it's on the average of the book. Is there? It's there if you see our page 25 of our investor deck has got the NBFC total.
I'll check that, sir. Sir, and going forward, what's your view on this 10 to 12% number that we are having today? So 1 year down the line, where do you see this exposure in the light of the current developments?
For one, we are not looking to rush in and take new exposure. We are reviewing the entire portfolio where we are confident and comfortable with the company, we are willing to give some exposure. Otherwise, we are toning down upon renewal or pricing increase where required.
Okay. And sir, on the net value of security receipts is around 411 crore. What's the gross value of these?
630.
630 crore. Okay. And sir, our exposure to Island FS?
Nothing. No direct exposure to Island FS. We have 3 completed projects where annuity has been coming in for many quarters. Those are still standard assets doing well. Okay. We have no direct exposure to ILFS.
Okay. And sir, on the loan book guidance for the year as a whole?
Last 2 quarters and for many quarters we've been tracking between 22 and 25. We think there is enough potential for us to keep that momentum going. We may choose to dial up, dial down in certain quarters depending on what our other priority is. But confidence of growth, ability to grow, opportunity to grow remains, and we believe 25% is doable.
Sure. Thank you.
Thank you. The next question is from the line of Jai Mundra from B&K Securities. Please go ahead.
Yeah, hi sir. Most of the questions have been answered. Just one clarification. So after this quarter, when this restructuring window of flood restructuring window ends, what was the amount you said this Kerala restructuring book would look like?
Between Q2 and Q3, about 100 crores will be the restructured amount from Kerala. I want to point out here that this is the carved out portion that is eligible for restructuring, that is being restructured using the dispensation.
Correct, sir. And as of now, this is 30 crores.
32 or 35 crores for Q2. 35 crores for Q2, and we expect that number to be about 70 crores for Q3.
Sure, sir. And sir, can I have the breakup of provisioning for this quarter into loan loss provision and credit related provisions, investment related?
152 crores of loan loss, 32 crores of standard asset, and 105 crores of investment and treasury provision.
Sure, sir. And lastly, sir, because this quarter has seen sharp improvement in the cost to income ratio. Your thoughts on on FY19 basis, that would be much helpful. Thank you.
We had guided at the beginning of the year that our exit rate will be along these lines, and we think we are trending along those lines.
Sure, sir. Thanks very much.
Thank you. The next question is from the line of Krishnan ASV from SBI Cap Securities. Please go ahead.
Yeah, hi. My thanks for taking this question. Just wanted to understand a little bit more, Shyam, on the Reserve Bank instruction and the penalty that had come through and was reported earlier this month.
Sure. This pertains to the RBS of March 17, which the report was completed in October or November of 17. Reviewed and closed with RBI in January of 18. As you know that we have never had divergences, and we are still happy that that never occurred even through this process. However, their enforcement department looks at all the RBS reports completed, and they show cost the bank on these 4 points. And they show cost on 7 points, we explained, and with these 4 points, they saw as one-off instances that had issues in March, prior period of March 17. And the regulatory requirements required them to levy the penalty. And we have, despite explanation, they have levied it, and we have gone ahead and completed it and moved on.
And does this have any lingering implications for the 2018 supervision cycle at all, Shyam?
Yes, it's very difficult to answer. We believe not, but it's for us to be on guard and ensure that we don't do anything silly. We think not. The early signals are very positive, but we live in a very dynamic environment, so we just have to be prepared for everything.
Okay.
Nothing that's leaving a scar at this juncture. Sorry, yeah, go ahead.
Yeah, I just want to also understand. There was one of the four issues raised in the RBI's directive was around submission of information to the central repository. I just wanted to understand. Does that in any way impinge on impinge on the kind of systems that you have in place? Anything to do with what is not being captured or going below the radar?
No, I think one of the observations was that data in submission was inadequate. It is unfortunate that this is the 5th year of RBS. Through the first 4 years, they accepted it. The 5th year, they believed that we were inadequate. So we have taken a set of steps to make sure that that doesn't happen. We have a full-fledged data validation team. As you know that the submission to RBI is online. They pick up about 520 odd data points directly system to system, and there's little room for interpretation. We did have areas where we had understood it one way, they had expected it another way. We have since fixed it.
Fair enough. Thanks. Just one other question on what this environment has meant for remittances and Federal Bank's own capabilities on the remittances front. I mean, how do you see that having progress far, and what else is being done to probably tighten that even further?
We enjoy a good market share in the entire remittance business pan-India, and in particular to the flows that come into Kerala. We are a very dominant player for a range of reasons. One, we have presence. Second, we have a great set of people doing a wonderful engagement with the exchange houses. Third is the technology support that we offer. And you may recall last year we even commissioned a blockchain experiment, and we've just announced a tie-up with Corda, which is going live by end of this calendar year, which is again a scalable blockchain-based technology solution. So we are involving technology, our presence, and the relationship we have with the very wide range of Middle East-based exchange houses. And we are also widely going into other geographies. So across the 4 quadrants, Kerala, Middle East, non-Kerala, world, rest of world, all combinations we are working on.
Great, I'm done. Thanks.
Thank you. The next question is from the line of Anirvan Sarkar from Principal Asset Management. Please go ahead.
Yeah, hi. Thank you for the opportunity, sir, and congratulations on a good set of numbers. Just one question. Wanted to know if you have done any portfolio purchases during the quarter, and if yes, what would be the quantum for the same?
No, we have not had any purchase.
All right. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Girish Raj from Quest Investments. Please go ahead.
Yeah, hi. Thank you. So of the investment provision, there was something related to Equirus. What was the quantum and what exactly was the reason for that?
The investment provisions, like you pointed out, had three, just to clarify, three separate segments in it. One is the market-related for GSEC and bonds. That's about 30 crores. Then the 2 strategic investments we made were one is in Equirus and the other is in CCIL. That's for about 30 crores. And the rest is strengthening our SR provisions. This 30 crores pertains to Equirus and CCIL based on these are unlisted entities, and the regulatory requirement requires us to do a mark-to-market, and the value of provision is about 30 crores. It's a one-time provision for this quarter.
So investment is 20 crore and against that 30 crores a provision.
No, two. We have got CCIL and
we have invested CCIL also.
Okay. And sir, regarding one question related to fee income, total core fee income would have been 260 crore, which is 54 crore increase compared to last quarter. So this 260 crore is, on a run rate basis, it is sustainable. How should we look at it?
Yeah, I think that's what we're working on. Because all of these elements are fairly granular.
Nothing is one-off.
Okay. And finally, NIM and ROA guidance, sir, if you may.
NIM, we said we will trend, we are at 3.15. We think we'll push it to another 3-4 basis points. And I had initially said 3.2, which seemed ambitious at that stage. We are nudging closer to that. And ROA, we want to exit at 1% for financial year 19.
Okay. Thank you, sir.
Thank you. The next question is from the line of Pranav Gupta from Aditya Birla Sun Life Insurance. Please go ahead.
Hello. Hello.
Pranav, we are getting a lot of disturbance from your line. If you have turned on the speakers, please turn that off.
Is it better now?
Yes, thank you.
Yeah, so I have two questions. Firstly, the SME slippages have seemed to spike a little bit. Anything specific, account related in that respect?
Yeah, I had mentioned that the Kerala related slippages in this whole non-corporate 350 was to 220 or so. There were some accounts in Kerala because of the floods. And we did have one account where we took a 100% provision for a fraud account of 25 crores in the non-Kerala.
Okay, so majorly it's due to the flood-related issues.
I won't say only flood. Normal run rate for SME has been about 120 to 150 crores. This quarter went up slightly. That increase is partly because of flood and a one-off one account.
Okay, and my second question is, so you believe that you should have at least about 50 crores of additional slippages due to the flood. You had it in this quarter, and additionally you will have it in the next quarter. What I understand is that you had around 1,500 crores of exposure in the heavily affected areas in the flood, and what that would have led to is that the collaterals that you have, values of those depreciating due to any damages that might have been caused. So don't you feel that the 50 crore amount is slightly lower in your assessment?
No, I think firstly the 50 crore is nothing to do with the damaged areas.
Okay.
The 50 crores is the account that didn't meet the damaged area, which is why they got NP. Otherwise they would have been dispensation.
Right.
Okay, so that is the general economy and the impact on Kerala as a state. In the damaged area, I said we have carved out and restructured 35 crores this quarter and another 70 odd crores in Q3.
Right.
That will be about 100 crores. That pertains to about 500 crores of assets which have the stress, which is a 2 to 3 year repayment is there for them to sort it out.
Okay.
Okay?
Sure. Thank you.
Thank you. The next question is from the line of MB Mahesh from Kotak Securities. Please go ahead.
Good afternoon, sir. Just a couple of questions. One again on the floods part. Can you just tell us what has been the entire program for the entire state, and what has been the overall restructuring which the entire system has taken? And these the few pin codes which were affected by the crisis, what was the system level exposure there for the quarter?
On system level, I'll only make meaningful guesses, Mahesh. On the system level, the 12 districts were declared as what is impacted. Our belief is that the outstandings of that must be something like 16,000 crores.
8 cities not impacted.
Right?
Okay. And of this 16,000 crores, your exposure is about 500 crores, is it?
No,
which was impacted?
No, outstandings in that area, ours is 1,500 crores. What we think in that, maybe under stress, is about 500 crores over 2 quarters.
And when you're putting this number in the restructured loan book, you only put the carved out amount, you don't put the full amount?
Yes, we have put only the carved out amount of 32 crores. That is what has been restructured. It has been carved out as a special loan.
The rest of the loan continues.
Okay. And in some of the other districts, things are back to normal and the performance of the portfolio is as what it was prior to the event?
More or less, yes. Where we are seeing stress is that 50 crore extra slippage.
Perfect. Okay. And sorry, and the other question was on the ILFS exposure, just running through it. You said it's negligible. Can you probably quantify broad range to this number?
I said it is not no impact on us. We have 3 exposures to projects that are completed, which are running, annuities coming in. Roughly about 200 crores is the total exposure. We have no impact that we visualize.
Okay, perfect. And sorry.
When you present your report, you may not have seen it. That number that you guys have put out doesn't seem to be right.
Which is true. I don't know how it reached out to the media in the first place. Apologies for that.
I'd like for us to be more responsible about it.
No, sorry for it. And just one last question, just to Ganesh on this question, is that have you seen pricing power improving in the corporate side?
Yes, I think we are able to price in line with the best players in the market, I think. So to answer your short point, answer is yes. And in fact, I think in some cases we are able to get a relationship premium, I would like to believe, because we are penetrating the right kind of clients in the right markets with our insight. So we are getting, and in fact on the corporate book, I think incremental yields marginally for us have gone up, They may be nominal given the segment is extremely rate sensitive, but I think the numbers suggest that there has been a yield pickup for us.
Perfect, sir. Thanks a lot.
Thank you. The next question is from the line of Renish Boa from ICICI Securities. Please go ahead.
Yes, sir. Thanks for taking my questions again. So, sir, coming back to our, this pricing of the book. So, in one of the comments you mentioned that our known base rate book is 90%, of which 50% is MCLR linked. So, rest is what? T-bills and those money market linked?
Yeah, external benchmark related is about 20%.
Is 20%?
Yeah.
Okay. And so do we believe, so going forward, let's say in FY20 and not in FY19, what sort of margin expansion we see in our book?
Renish, these end up in the realm of speculation. We are working on diversifying the book, which will give us the ability to command higher margins. Because the cost of money seems to be a very moving, dynamic part which nobody is able to establish. If you notice, one thing that didn't get picked up is our focus on the granular deposits and in the current account. We've seen marked growth in our current account, which is a point I had mentioned in two, three of my earlier calls. Sequentially, our current account is growing. From second half of last financial year, you would have noticed the marked growth. This quarter was a sequential 6% and Y-on-Y 30% growth in current account.
So, right. No, sir, basically just wanted to understand whether, internally we have any strategy of, so below a certain risk spread will not do, a lending or will not do business. Is there any, some benchmark we have set?
Yes. Answer is yes.
We have a lot of this, but we don't hard code ourselves into a position and an opportunity we want to miss. Let's put it like that,
yes.
Okay, sir. Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of Roshan Chutki from ICICI Prudential Asset Management. Please go ahead.
Yeah, thanks for taking my question, sir. So, you said 20% is external benchmark-based book. Is there a 20% fixed rate book for us?
Yeah.
Okay. And just on this SME book, so is there any improvement in SME TATs as we have been building the franchise now?
Yes, we are almost every quarter seeing a progress as we get better in our underwriting, as we put in a more seasoned and senior team. We have set metrics to monitor that. I think it's moving. We have anecdotal cases of doing it in 2 to 3 days for very good cases. And so we are comparable with the best.
So barring this one-off slippage fraud account in SME, otherwise you don't see any stress building up in SME portfolio?
Nothing material. This fraud account, unfortunately, is the top 3 banks have been jointly affected.
Okay. And on the 500 crore stress book that you have in the Kerala, due to Kerala floods, why carve out only 100 crores as in across 2 quarters?
No, I think I'll explain in case anybody has missed it. The carving out as per the SLBC mandate, as per the RBI approved in a scenario of natural calamity, is as follows. The window of restructuring is based on the judgment by the SLBC on how bad is the situation and what is the customer relief required. IRAC norms are not violated. It is just what part of the book the client will face stress that can be carved out and booked as a separate loan which can get a payment holiday. So, when the SLBC convened, they took April 18 as the start point and gave 1 year of interest plus principal or whatever the demand as the pool that can be restructured. So, out of the 200 crores this quarter that were in the stressed pool, which had completed by 30th September their relative work that needs to be done, 32 crores was the due for this period and that got carved out. The rest the customer has to pay as normal starting April 19.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Harshit Toshniwal from Jefferies. Please go ahead.
Hi, sir. A couple of questions on carrying from the previous question. You said that your exposure to the 12 affected districts was around 1,500 crores. When I simply look at that particular exposure, you say that your slippages in the quarter because of the Kerala flood was around 40 to 50 crores and your carve out to the restructured was around 30 crores. So basically, rest of the portfolio is something which is still standard, and you expect around 1,400 crore of that 12 district is something which you expect to continue as usual.
Let me explain. Kerala Federal Bank outstanding credit side non-corporate is about 23,000 crores. I'm just giving you the universe.
Okay.
In the districts and in the most affected pin codes, our outstanding is about 1,600 crores. That is one data point.
Right.
A normal quarter before this floods, roughly our slippage in Kerala between retail, SME, agri, education is about 150 to 160 crores. Good quarter 120, 130, bad quarter 160, 170.
Okay.
Then we dimensioned the impact of Kerala floods and we did a call on August 20th to share with our investors. We had said that could be roughly 40-50 crores as the incremental impact 20-25%. That has nothing to do with the pin codes. That is the place that doesn't get the dispensation. If you get the dispensation, that loan will not be an NPA.
Right. So if that 40 to 50 you said would be mostly from the 1,600 crore of the 12 districts.
No. That's what I'm saying. That 40 to 50 crores is from the universe of 20,000 crores.
Okay.
Right. 1,600 crores is a subset of our 20,000 crores outstandings in Kerala.
Right, but my slippages you mentioned because of, so if I exclude that pool itself, but in totally my restructured assets are 30 crore because of the flood, and my NPL recognition or slippages has been around 40 to 50 crore in the quarter. So apart from this, so this would either be slippage or restructured, but the rest of the entire portfolio is working as usual in the normal way.
Yes, certainly.
Okay. Okay, and you expect that this 30 could be another 70, but in the slippages you don't expect this. You believe that 40-50 crore could also be a bit higher number going forward, something which we realize later on?
No, let me just clarify. The slippage number for Q3 and Q4 may be similar to our total Kerala slippage for Q2. In addition, like we did about 30 crores of standard restructured in Q2, that number may be 70 crores in Q3.
Okay.
Because the window for restructuring ends on 30th November.
Right. Okay, thank you.
Thank you. The next question is from the line of Darpin Shah from HDFC Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. So just want to reconfirm, you're guiding for 1,450 crores slippage for the full year, and we have already done 950 odd crores in the first half, which means around 250 crores for the next 2 quarters.
Yes.
So, but if I see, within that, you have 100 crores of Kerala impact. So even if I remove that, then our normal run rate is also on a higher side, previously.
Darpin, while I won't get into quarter on quarter, we, I think, are holding on to our commitments made at the top of the year.
Okay, fair enough, sir. Thank you.
Thank you. The next question is from the line of Dhaval Gada from DSP Mutual Fund. Please go ahead.
Yeah, hi sir. Just one question related to incremental yields in the corporate, retail and SME segment that we are seeing.
Our yields have started picking up in Q2. In every segment, it was roughly 5-6 basis points over the previous quarter. Combination, one is the asset mix, second is the pricing power coming in, third is between yields and also getting full client relationship, we are beginning to see traction.
Okay, fine, thanks.
Thank you. The next question is from the line of Jayesh Gandhi from Harshad Gandhi Securities. Please go ahead.
So there was some sale of ESOS by Mr. Shyam due to margin call. Can you explain what was that event?
No, I have taken a loan to buy my shares. Share price falling. I did not want to sell. I wanted to meet my commitment, so I had to sell some shares to pay back or stay on the loan.
Okay, sir. Thank you very much. That's all from my side.
Thank you. The next question is from the line of Kaushik Poddar from KB Capital. Please go ahead.
Your total stress book on 30th September is at 2.01%. So where do you see this figure? I think you had committed around 1.7% as on 31st March 2019. So do you stand on that number?
I think yes, Kaushik, except that, if it's not 31st March, it will be 1 quarter down because about 150 crores of NPA got added because of Kerala. But that said, we are trending quite well.
Just on the slippage front, you are sticking to that 1,300 crore figure or 1,300 crore plus 150 because of
1,300 plus 150. 1,450 is our new guidance.
And you have already done around 950 or something, right, for the first 2 quarters?
Yes.
So you're talking of 500 crore for the next 2 quarters?
Yes.
Okay. And lastly, see, you have not opened branches for quite some time. It's at the same level. And you are talking of, say, advance growth of around 20-25% or 22% plus, and deposit growth of maybe 15-20%. Can you achieve that without increasing your branches?
This quarter, and we believe that it's indicative of our plans.
Right.
Credit growth was 25, deposit growth was 21.
Yeah.
And we think that run rate will continue.
So you are not planning any opening of new branches?
No, we are not looking at, but we are expanding our RM network quite materially. We are also looking at some BC arrangements, and we think we can expand through that.
Okay. Thank you. That's it.
Thank you. The next question is from the line of Sohail Halai from Antique Stock Broking. Please go ahead.
Yeah, hi, good evening, sir. So just a clarification, basically understanding. In terms of this carve-out portion, so example, my overall borrowings was 100 rupees and my interest and installment due were around 10 rupees. So this 10 rupees is the carve-out portion, right?
Absolutely right.
And so what would be the entire amount that is actually impacted?
I said 37 crores or 35 crores, 214 crores is the back of that.
Okay, sir. Thanks for that, sir. That's it.
Thank you. The next question is from the line of Hemant Patil from Alder Capital. Please go ahead.
Yeah, hello, sir. This is on slide 25, where you have called out NBFCs as 19% and housing finance companies as 14%. Just wanted to understand the risk assessment that you're planning to do. Is it on the HFCs as well, or is it just on NBFCs?
And it's all on all the names.
On all of them?
Yes.
Okay, and even the in terms of the corrective action in terms of lending and disbursement, so to these will also be on all the names?
Yeah, absolutely.
Okay, thanks a lot.
Thank you. The next question is from the line of Chinmay Desai from Anvil Shares and Stock Broking. Please go ahead.
Yeah, hi. Good evening, sir. Sir, I just wanted to know, you said something about, I missed that part about the OPEX impact on the flood.
No, one of the questions asked was some parts of the OPEX had gone up, non-people. Yes. We said this quarter there were two distinct events. One was the penalty of 5 crores and roughly about 8 crores was the cost of the various initiatives impact on account of the floods.
Okay, sir. Thank you. That's it.
Thank you. The next question is from the line of Chetan Varia from VKL Family Office. Please go ahead.
Yes, sir. Thanks for the opportunity. My question is on slide 18, where you are showing the distribution between Kerala and outside Kerala. Now, in the previous con call, you mentioned that at the end of Q2, you'll be in a better position to give assessment of what the total exposure in Kerala per se. So now that we are in Q3, in middle of, the growth in loan book in Kerala from here on for the second half as well as for the FY20, where do you see the growth rate to be? And the outside Kerala, what kind of guidance can you give?
No, I think this run rates on various segments that you're seeing is been not a point in time. That's how it has been for many quarters. In Kerala in particular, for the last 3 to 4 quarters, we've been slowing down our SME and commercial banking credit because of certain environmental issues. Retail continues to be good, and selectively there are corporate opportunities, we will grow. Non-Kerala, the opportunity is infinite.
Okay. Okay, and so finally for the asset quality side, what kind of GNP numbers can you hope to end the year with?
I think 2 data points we've given sort of speaks to that. Roughly 1450 crores or so of slippages and credit cost of 65 to 70 basis points.
All right, I take that. Thank you, and that's it from my side.
Thank you. The next question is from the line of Ankur Shah from Quasar Capital. Please go ahead.
Hi, sir. So how has the new business initiatives panned out?
The new initiatives, if you are talking to, have been in terms of the segments that we are looking to do, whether it's retail, unsecured, commercial, fee income. Retail unsecured, you must have seen, the growth has started picking up, albeit on a small base. From 260 crores, it's become 520 crores, so virtually doubled our book. And it's only to existing customers of the bank, bureau-based, online, so it's an instant loan. The commercial vehicles are a very small piece. It's just in one geography. We are putting out a team that may take another 3 to 4 months, but the traction is beginning to come in that geography. Margins are about, pricing we are getting about 10.5 to 11%. And fee income is there for you to see in terms of the FX and retail fee income.
So, sir, do we have a credit card business or how is it? The personal loan is a direct...
We have a co-branded credit card which has been there, but it's now we are giving it more life, and we are working with SBI to see what all we can do with it. But that's not something that will happen in Q3. It will take another 3 to 4 months for it to mature.
And so just for the knowledge, like how many credit cards have we issued till date?
25,000 or so. Very low, very small.
Okay, so sir, like just from, like I was seeing the customer base slide, it is approximately 8.5 million customers. And obviously looking at other banks and how they are trying to take a pie of this granular consumer finance thing. So don't you think there is an easy possibility to scale up this business to at least 1 million customers, the existing ones?
Yes, I mean we are certainly growing, as you notice, sequentially every quarter. We're putting in that many customers, so our annual increase will take us to that number of
no, I was mentioning about the credit card.
No, on credit card,
out of the 8 million customers that you have, is there a possibility for our with the distribution strengths which we have?
Yes, we are working on it, but I'm not putting a timeline to it. But very much yes.
Okay,
we have a very senior person who joined only for that.
Okay, thank you, sir.
Thank you. Due to time constraints, we will take the last 3 questions. The next question will be from the line of Sangam Iyer from Shubhkam Ventures. Please go ahead.
Yeah, sir, so just a clarification first. The 500 crores of slippage that we're looking at for the second half, of that around 200 crore per quarter is something that's purely from Kerala itself. That's what we have been guiding?
I mean, that could be an interpretation, but we are saying the full year number of 1450 is what we are holding on to.
Okay. And sir, regarding the OPEX outlook, we said that barring the 30 crores of one-off that were there in the quarter, the rest of the OPEX should be something that should be a progressive one going forward.
Yes.
Got it. Okay. And sir, on the recoveries and upgrades, if you can give us some idea in terms of how the overall system is in terms of in terms of being favorable for more recoveries and upgrades going forward, because that will give us a better understanding of how things will move going forward.
The recovery upgrades which are bilateral in nature are trending okay. That which is in the legal process through NCLT and the negotiations, to be honest, that is a very elaborate process, and thankfully we don't have too many of those cases, but they have not all, except for 1 or 2, none of them have matured into a win as yet. But what is bilateral, what is something that we can negotiate based on an underlying asset and negotiate, I think that's moving okay.
Okay, so is there any provision coverage target that you would have in mind that you would want to exit for the year?
Including technically written off, we would like it to be edging closer to the original number of 70%. I'm not saying by end of Q4, but we will push ourselves to that over the next 4 quarters.
Okay. Got it. And the last question from my end, for the 22 to 25% growth outlook, is there a mix that you would want to see which would help us in retaining the NIMs?
Yes, I think the first is between retail and corporate. We would like that on the flow it should be 50-50. You would have seen even this quarter our growth is about 7,000 crores, 6,800 crores, and it's almost 50-50. And within that retail 50 or retail business banking and agri 50, the margin is shifting towards the higher yield products.
Okay. Great, sir. All the best.
Thank you.
Thank you. The next question is from the line of Chetan Varia from VKL Family Office. Please go ahead.
Yes, sir. Thanks for the opportunity. So there was some talk earlier regarding the stake sale in the insurance business. So is there any update on that direction?
At this juncture, no. The company, as in the core insurance company, is doing well. We remain invested, and we are also seeing benefits of it from our retail insurance distribution. IDBI has seen some management change as also ownership change. We think in Q3 some clarity may emerge, and we may be able to revisit a process that commissioned in Q1.
Okay. And so for the stakes that we are purchasing Equirus, by which quarter that you're planning to offer the full-fledged capital market services and products through all the relevant customers like?
Already commissioned. Our RMs are co-calling with theirs. Ganesh sits on their board, so there's a very active engagement between the two companies.
All right. That's it from my side. All the best to you.
Thank you. Okay. Due to time constraints, we will take the last question from the line of Ashwini Agarwal from Baroda Pioneer Mutual Fund. Please go ahead.
Hi, sir. Maybe just a repeat question, but just want some clarity. When the loans are restructured, you wouldn't be booking your interest income on those restructured loan amount, right?
On the carved out amount?
Yeah.
Yeah.
Okay. So have you factored that loss in income in your NIM guidance?
Quantum is small. The quantum is small.
Okay. And this flood happened in the midway of the Q2. So your effect of how much NPA would be there would be felt only after the 90 days past the dues, right?
Yeah, that's why I guided for Q3 also.
So is there a possibility that the number overshoots the guidance which you have given?
We've made our estimates. We are, at this juncture, reasonably confident.
Okay, thanks.
Thank you so much.
Thank you very much. I now hand the conference over to Mr. Raj Narayanan N for closing comments.
Thank you all for accepting our invitation and joining our call. Thank you and good evening.